What is primary market and secondary market? Primary market is a place where securities such as shares, debentures, loans and deposits, preference shares etc. are issued by the company for the first time to general public for raising funds. The amount that is received from the securities becomes the capital for the company. Primary market is not the name of any particular place, but the activity of bringing in new issues is called the primary market. The process of issuing new stocks to raise money, directly from the public is called initial public offerings, also shortly called as IPOs. Primary market is where securities are created, and it is issued by both new and existing companies. Since investors buy securities that were never traded before, primary market is also called as new issue market. The securities in the primary market can be sold only once, and after it is sold, further trading takes place in secondary market. In the primary market, investment bankers do the selling of share issued by the companies and the investors can buy the shares directly from the issuing company. A secondary market is a marketplace where already issued securities in the primary market such as shares, debentures, loans and deposits, preference shares etc. can be bought and sold by the investors. It is the place where the securities are traded among investors. After the IPO, initial public offering, those securities get available for only trade in the secondary market. So, it is a market where investors buy securities from other investors, and not from the issuing company. Hence the secondary market is also called the aftermarket. In the primary market, the price of a security is set beforehand, but in the secondary market, the price of securities is determined by its supply and demand. Price of securities doesn't fluctuate in the primary market, unlike in the secondary market. Secondary market gives liquidity to all the investors. Small investors usually don't buy the securities in the primary market because issuing company sells in lots, which requires a big investment. But in secondary market, investors can buy any number of stocks they want, and it can be easily bought or sold by the investor. In secondary market, buying and selling of shares can be done in an infinite number of times. It is a good indicator of a country's economic condition. A rise or drop in the stock market suggests a boom or recession in an economy. Thanks for watching this video. Support us by subscribing this channel. Click the bell icon for instant notification of videos from our channel.